In an unexpected twist, the latest report from the U.S. Labor Department has cast a shadow over what was once considered a robust job growth period. The revelation that nearly 818,000 fewer jobs were created than initially thought has sent shockwaves through the economic and political landscape. For a nation that has prided itself on a strong post-pandemic recovery, this recalibration not only tempers past optimism, but also ignites a fierce debate over the true state of the U.S. economy. As both sides of the political aisle seize this moment to push their narratives, one question lingers: how accurate is our understanding of economic recovery in an era of political polarization? The U.S. economy has long been a subject of intense scrutiny, especially during times of political turmoil. Recent developments have brought this into sharp focus once again. The Labor Department's latest revision has unveiled a stark reality: job growth over the past year was weaker than initially believed. According to the new estimates, employers added about 818,000 fewer jobs from April 2023 to March 2024 than previously reported. This revelation comes at a critical juncture, just months before a major presidential election, making the stakes higher than ever. The significance of the revised numbers. The revised data now suggests that the monthly job growth rate was around 174,000, significantly lower than the previously reported figure of 240,000. This change implies a 30% reduction in job creation, marking the largest downward revision since 2009. Sectors across the board, including media, technology, retail, manufacturing, and professional services, experienced notable decreases in job growth estimate. The ripple effect of these revisions suggests that job growth during this period was more heavily reliant on government sectors like education and healthcare than previously understood. Ryan Sweet from Oxford Economics noted that while hiring remained robust, it was not sufficient to keep pace with the growth in the working-age population. The data indicates that the overall number of jobs in the U.S. is now about 0.5% smaller than originally thought, a seemingly small figure with significant implications. This revision not only casts doubt on the resilience of the labor market, but also challenges the narrative of a booming post-pandemic recovery. Understanding the origins of the revised data. The Labor Department's job creation estimates are based on surveys sent to employers. These figures are routinely revised as more data becomes available, with a comprehensive reset typically occurring at the start of each year. The recent update, however, was an early preview, incorporating county-level unemployment insurance tax data. According to Sweet, this revision was notably larger than those in previous years, raising concerns about its accuracy and implications. Some analysts have suggested that the revision might be exaggerated, arguing that the data does not account for jobs filled by unauthorized workers. Given the recent surge in immigration, these jobs might not be reflected in official tax data, potentially leading to an undercount of job growth. Historical patterns also offer some hope. Over the past 4 years, final job growth estimates have generally been higher than those indicated in preliminary August reports. Yet, this pattern does little to quell the uncertainty stirred by the current revision. The political fallout. The political implications of these revised job numbers were immediate and intense. For the Biden administration, which has championed strong job growth as a cornerstone of its economic recovery strategy, the news was a significant blow. Strong job creation has been a key argument in favor of the administration's policies, with claims that the U.S. emerged from the pandemic with the strongest economy in the world. However, this new data provides ammunition to the administration's critics. Republicans wasted no time in using the revised figures to accuse the Biden administration of misleading the public about the true state of the economy. The Republican Party took to social media to highlight the discrepancy, framing it as evidence that the administration had exaggerated its achievements. Former President Donald Trump also chimed in, labeling the situation as AMASSIVESCANDAL, and suggesting that the real numbers were even worse than reported. In response, Jared Bernstein, chair of President Biden's Council of Economic Advisors, defended the administration's record. He emphasized that despite the revisions, the U.S. has experienced a strong jobs recovery, with real wage gains, solid consumer spending, and record levels of small business creation. Yet, in an election year, such reassurances may do little to sway public opinion already shaped by partisan narratives. Economic implications and market reaction. For much of the past year, the U.S. has reported strong job growth that defied economist expectations, even as the public sentiment remained skeptical. This resilience was surprising, given that businesses and households were grappling with the highest borrowing costs in a generation. In such an environment, continued job growth seemed counterintuitive. However, the latest revisions have bolstered arguments that the labor market might be more fragile than previously thought. Many analysts believe that the revised job numbers will strengthen the case for the U.S. Federal Reserve to cut interest rates at its upcoming meeting in November. The central bank has already been considering such a move to prevent further weakening in the job market. While the revision did not trigger widespread panic, financial markets, which had been jittery due to earlier concerns about the economy, largely took the news in stride. As Olivia Cross, a North America economist at Capital Economics, pointed out, the updated figures suggest that while job growth may have been softer than initially thought, it is not alarming. Broader implications and questions for the future. The revised job numbers highlight a deeper issue: how much can we trust economic data in an increasingly polarized political landscape? The timing of the revision, so close to a presidential election, has inevitably led to its politicization. Yet, beyond the political fray, these figures also raise questions about the accuracy and reliability of the methods used to gauge the health of the economy. As businesses and workers alike navigate an uncertain economic future, the importance of trustworthy data cannot be overstated. Moreover, the revision prompts a reevaluation of the strength of the post-pandemic recovery. With the labor market not as robust as once thought, what does this mean for the millions of Americans who are still struggling to regain their footing after the pandemic? The intersection of economic reality and political narrative is more complex than ever, and the stakes are high as the nation approaches a critical election. As we reflect on these developments, a crucial question emerges: how can we ensure that our understanding of economic health is grounded in reality, rather than shaped by political agendas? Your thoughts on this issue could provide valuable insights into the broader debate. Share your perspective. How should we navigate the intersection of politics and economics in today's world?